Hey guys, it's James, and today I wanted to see what Microsoft would look like if we put it through our discounted cash flow model as well as our grams model. I'm going to forego the dividend discount model, as the dividend discount model is geared more toward those dividend aristocrat and dividend king paying type of stocks and ETFs. First off, we're going to start with grams model. All we need for this calculation is the growth rate in the AAA corporate bond. Everything else for grams model is embedded into the formula right here. First off, we need to determine a growth rate that we are comfortable with. Now let's take a look at the past growth of Microsoft. If we come over to Seeking Alpha, come over to their Momentum tab, come down to their price performance, you can see in the past 10, 5, and 3 years, there has been pretty much consistent growth for Microsoft. The average growth over the past 10 years has been about 73% per year. For the past 5 years, if you take this 272 cumulative average growth and determine an average 5-year growth, that is about 50% per year. And if you look at the 3-year growth, in the past 3 years, it's been about 30% per year. So we have 30% per year, 50% per year, and 70% per year looking at the 10-year figure. So I would say a very modest growth rate of 30% compared to what it has been the past 3 years. We'll go ahead and settle with 30%. And then the AAA corporate bond rate today is currently 3.97. That gives us an intrinsic value of $294 with grams model, with the current Microsoft price being $259. That gives us a difference of 13.5% with a 25% margin of safety. So that looks pretty good. Next, we're going to take a look at the discounted cash flow model. Now there's a lot going on with the DCF model. Most of it is already put into the calculation in the formulas behind these numbers here. And all we need to do is find the free cash flow for the past 5 years, find its current cash holdings and its current debt. We're going to use a 2.5% perpetual growth rate and an 8% discount rate with a 25% margin of safety. To be able to find the free cash flow for the past 5 years, what I did was went to a website called Y Charts, came over to data, typed in free cash flow, and came down here and added up the free cash flow from these quarterly figures. And for 2021, 2020, 2019, 2018, and 2017, they have all of the cash flow numbers. Before we go back over to the calculator, I also found the cash amount that Microsoft has, came over to Yahoo Finance, came over to their financials tab for Microsoft, came down to the sub tab balance sheet. They have 130 million in cash and cash equivalents, and their total debt is $67.7 million. Back over on the spreadsheet, the free cash flow numbers are in for the past 5 years as well as their cash and debt. First off, we take a look at their growth from 2017 to 2018. From here to here is about 3.4%. For 2019, from here to here is about 16.5%. For 2020, from 2019 to 24%, and from 2000 to 2021 is about 22%, with an average growth rate of about 16.8%. We take this 16.8% and average out what the future would look like. So at the end of 2022, with a 16% growth rate, their future free cash flow for 2022, 16% more than 231 billion would be 269 billion, and so forth, all the way for the next 5 years. By the end of 2026, 502 billion, with a terminal value of 9.3 trillion, if considering if they were to go off into infinity. And then we discounted these cash flows back to the present value as due to inflation, and we discounted at an 8% rate. So we discounted the 5 future years and found a terminal value for the current present value of all future free cash flows. We added it all up and found an equity value for Microsoft. And with Google Finance formula, finding the outstanding shares for Microsoft, we found the intrinsic value with a 25% margin of safety to be about $738 compared to Microsoft's $259. So that is a difference of almost 2 times as much as the current price. And if we come over to analyst forecasting website such as CNN Business for Microsoft, we take a look at their low, median, and high forecast for the next 12 months. And this is pretty much in line with the Graham's model is actually telling us. So this is fairly in line. And we also come down to their analyst recommendations, 44 analysts, and the total overall consensus is a buy. If you take a look, 36 buys, 6 outperforms, and 2 holds, with 0 underperforms and 0 sells. Coming down and looking at their earnings forecasting, if you see their 2018, 19, 20, and 21 report earnings, for their annual earnings, it looks like it has consistently continued to grow, and analysts are forecasting 2022 and 2023 to continue to grow in the same upward trend. And coming back over to the calculator, if you guys wanted access to this valuation spreadsheet or intrinsic value calculation spreadsheet, you can head over to my Patreon. On Patreon, I have 3 separate workbooks or calculators that I offer. The first one would be calculating using the compound interest formula, being able to project what your portfolio would look like, or project what different various assets or securities would look like, as well as a 401 calculator and a overall portfolio or dividend portfolio calculator. And then on the second calculator, my dividend portfolio tracker, over on the valuation tab is where you will find the intrinsic value calculation, or the discounted cash flow model, dividend discount model, and the Graham's model. And over on my third calculator is currently right now just a simple budgeting calculator. All the inputs are in the yellows and the calculation is done in the green. So with that, thanks for watching.